Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Apple report for Wednesday, October 25th, 2023.
But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already. Subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues. And check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever.
On with the charts. So let's take a look at the big picture, work our way into the day itself. Just a reminder of the big picture. If given the opportunity to buy that 165.74 to 167.15 area, you should be prepared to do so, not only on a daily basis, 3 to 5 day swing trade basis, 3 to 5 week swing trade basis up to 188.10. Also, over the next full year, this is a long-term support area we settled above in May. We fell back to it, tested it, and from here we can trade higher to 188.20, 188.10 by the end of December or sooner, probably sooner, and this 229.64 long-term channel top by this time next year or sooner. If we were, however, to close the week below 165.74 by the required 1% margin, and I don't see that happening, but if so, then just the opposite. We continue to unwind into the first quarter, the following 3 to 5 months, then in reach of 132.20. But we are above 167.15. And, just over the last couple of days, we tested this channel top that is now at 169.82. At one point, I considered this 3-star support. You could too, perhaps. I just don't like to bunch all of these levels up. If you buy a 3-star weekly support level, you're likely to hold it. In terms of your risk management, maybe even down to 167.15, so I just don't like to encourage buying all the way down at key levels, and then you're just super long. So I just want to keep it light here with the higher volatility. 169.82 able to contain daily, possibly weekly selling pressures, and above which, we closed above this a few weeks ago, there is still a solid case to be made for, bullish continuation up to this upper 180s, 187.54, not over the next week, but between now perhaps and the end of November. There are clearly some upside hurdles we need to push through for that to look increasingly likely. The first is really 172.97. This is a formation that we almost tested on Tuesday. It can contain daily buying pressures, and, below which we can fall back to 169.82 by tomorrow, possibly today. This is our two-sided framework for the day, and they both have pivot point qualities into later week. So I will say, there's a decent chance we'll open today above 172.97. We actually closed Tuesday 173.44 roughly. If we do open above 172.97, it is our day support. And we should then continue up to 176. We could continue up to 177.60. All these little minor points on the way up have been carefully chosen. They're very tradable levels for aggressive day traders. I will say that a settlement today above 172.97 should, by the end of next week or sooner, result in a test of this 179.86 long-term trend line. So there's your up pivot. If we close above 172.97 today, 3 to 5 day swing traders go long to at least 177.60, more than likely 179.86, where profits can be taken. Now, if we close above 179.86 in the coming a week or two, you can see the blue line here, 179.86. And then we're just another 3 to 5 days away from pushing into the significant 180s. So, picking the point. What is the point that, if settled above, clearly indicates 187.54? And that is so subjective. It's just difficult to ascertain. I can go back to this chart here. 169.82. We are still above it. And because we are still above it, I'd mentioned at one point several weeks ago when we closed above it, how having settled above it, that this 187.54 formation is then considered a 2 to 3 week target. And that is still in play. I mean, I will say that continued settlements above 169.82 will keep the upper 180s in reach over the next few weeks. Closing today above 172.97, expect 179.86 by the end of next week or sooner. Closing then above 179.86, we are just about 3 to 5 days away then from actually pushing into this significant zone of resistance. 183.56 is a new rising channel top, converges with this descending channel top at 184.40 over the next few days. That's going to be significant, but we're not going to see that this week. And by the time we actually get up and over some of these key levels, this 187.54 channel top coming down will have converged by the middle of November with this rising channel top presently at 183.56. This will be an important convergence, and we may well be up here by that point in time. Closing today above 172.97 is the beginning of that process, in my opinion. 179.86 then likely, possibly within 3 to 5 days. And we can top out here for a day, but how many times are we going to test this and it holds? I do think on the next test, it's increasingly susceptible to violation, and closing above 179.86, we're just another week away from pushing into the significant zone. This upper area, 187.54 on the daily chart, 188.10 on the weekly chart, able to contain buying through November into December, and from here we can fall back again into the mid to upper 160s within a month or two of testing it. We could fill this wedge out all the way through the rest of the year, but it would be a settlement at the end of a week above 188.10 that would then signal 229.64, within several quarters, 3 to 5 months, half a year, take your pick, something like that. We'll be watching it closely at that time. Let's go to the downside here today. I don't think I covered it fully enough. I don't see us closing below 169.82, but holding below 172.97 does allow that intraday. And yes, if we do settle today below 169.82, tomorrow, quite easily, we test 167.15 down to 165.74, and that is once again our long-term support, able to contain selling well into next year, and above which 229.64 remains a one-year target or sooner. Not unless we close the week below 165.74 by the 1% margin of 164.08, do I see just the opposite. No more constructive to bullish expectations as we move well into next year, but rather as we move into the later Q1, we should fall all the way back into the low 130s. I am going to leave it at that for Wednesday's Apple. Of course, I'll be back tomorrow with Thursdays. Please click like, share, subscribe, and check out wickedstocks.com.